on in, sit back and relax. You're listening to episode 204 of the WealthTech Today podcast. I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. And this podcast features interviews, news, and analysis on the trends and best practices all about wealth management technology. Welcome to our October monthly news review. I have a lot of stories to cover, including the Future Proof Festival, big news, both good and bad, from InvestNet and Orion, and of course our regular updates on movements in the industry, integrations, changes, acquisitions, and our WealthTech integration score and the Keatsis Ezra Group Advisor Tech Map updates. But before we get started, I have a message for you executives at wealth management firms. Your tech debt is holding back your business growth. Your software platform is old and rusted and falling apart and needs an overhaul. Your disparate systems don't communicate with each other and is driving your ops team and advisors crazy with manual processes and errors and Excel macros and worksheets. So if you're in charge of technology or operations for a broker-dealer, an RIA, a family office, or a TAMP, you should run, not walk, to our website, EzraGroup.com, and fill out the Contact Us form on the homepage. Our experienced team can evaluate your current tech ecosystem, deliver targeted recommendations, optimize your existing systems and operations, or even run an RFP and help you implement brand new software to take your firm to the next level. And you can take advantage of our free consultation by going to EzraGroup.com. Now, a few housekeeping items before we continue. Please subscribe to this show wherever you listen to podcasts so you don't miss an episode. We support the Invest in Others charitable foundation. You can check them out at investinothers.org. All right, now let's kick this thing off. Come on in, sit back and relax. You're listening to the September News Roundup on the WealthTech Today podcast. I'm your host, Craig Iskowitz, founder and CEO of Ezra Group Consulting. And this podcast features news, information, updates, and trends all about wealth management technology. And as I said, this is our news roundup for September, just squeezing in at the end of the month. Got so much to talk about with you. Let's just jump right in. First up in the news, Future Proof. What a great conference out in Huntington Beach, California. I'm sure you've heard about it. 3 days of a wealth management technology festival. And outside, intense. It was very cool. A lot of fun, very relaxed, no ties to be found, people in shorts and t-shirts, flip-flops, certainly a different vibe from your typical wealth management conference. I've got a bunch of notes here that I took during the conference. I'm just going to bounce around a couple of different things, just to give you a quick overview. First day was Sunday, and kicking off the conference was Jamie Hopkins, formerly of Carson Group, now of Bryn Mawr Trust. Some practice management tips. What's your why? Create a conviction mindset to be a strong leader, not being what you say you are, but being what you do. And grit means having a purpose that drives what you're doing. A lot of marketing panels at this conference. In fact, all the panels were really good. All the ones that I attended, I was trying to move it back and forth to see a lot of the different panels. A bunch of marketing panels, and I eat that stuff up. Samantha Allen, also from Carson Group, talked about finding something that's unique to your practice for advisors who are looking to market their practice. Find something unique that's just that can differentiate you from every other firm that's out there. Another good tip from Samantha: the funnel doesn't end at conversion. Keep working your prospects even after they become clients, so that they deliver better referrals. Kendra Wright from Rebel Media Marketing: focus is the ultimate competitive advantage. Another tip from Kendra: borrow other people's audience. And what that means is go on other people's podcasts, write guest posts on their blogs, borrow their audience, and let them borrow yours when you get an audience. Gary Fudem, CMO of Mercer Advisors: rebranding by first thinking about their why and how before the what. So think about your why and your how before the what. Reminds me of Simon Sinek. What's the why? Another tip from Gary: measure, 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 and then double down on what's working. Boom, do it. Another great marketing practice management leader in our industry, Stephanie Bogan, was at Future Proof, talking about the leadership mindset. Did you know your mindset drives 80% of your success? It's true. Elevate your work, elevate your health, your wealth, elevate your well-being. Be bold. Great leaders embrace uncertainty. I'm sure you can find more about Stephanie Bogan just if you Google her. There was a CEO roundtable. Sarah Levy, the CEO of Betterment, talked about how she believes robo-advisors are an on-ramp for new investors to graduate to human advisors. Bill Capuzzi from Apex, the plumbing of our industry is broken with high minimums keeping younger investors out. Kunal Kapoor from Morningstar, AI-powered chatbots. Clients tend to ask technical questions, but when they put a human face on the chatbot, like with their AI-powered chatbot called Mo, clients ask more personal questions that they would normally ask their advisors. I found that to be very interesting. Author Morgan Housel, who wrote a book called The Psychology of Money, gave a couple tips. As wealth grows, increased complexity is directly correlated to increased unhappiness. People with a simpler life are happier. Differentiation is survival. He also talked a bit about the business of writing books, which I thought was interesting in some of the Q&A. So that was my notes from Sunday. Again, it was a 3-day or 4-day conference, a 3.5-day conference. On Monday, Joe Duran, founder of United Capital, another number of other firms, and RA aggregator pioneer. He lamented the industry's lack of original thinking. He talked about the acquisition by Goldman and made a comment, all private equity is not created equal. Talked about his history and about his past and growing up. Mentioned resilience comes from adversity. One interesting story he told was part of the sale of United Capital to Goldman. He insisted that they peel off $30 million off the top and give $6 million to charity, and that $24 million should be distributed to advisor teams that didn't have much equity in the firm and wouldn't be making out from the deal. So I thought that was pretty decent of Joe. A lot of panels, at least 6 panels about alternative investments of different kinds. Opto Invest's Matt Malone said access to alts isn't the problem anymore for advisors. Instead, they need education and customization to thoughtfully add private markets to client portfolios. Another panel had Mazi Abadori from Altruist. He talked about on managing the overwhelming choice available to RIAs. Be deliberate and methodical about what your practice looks like, the type of clients you want to serve, and how you want to spend your time. Margaret Hardigan, CEO of Marstone. Most wealth management firms do not have seamless integrations because between key systems. Man, we've seen that many times. We know that over at Ezra Group. Integrations are a problem. Also from Margaret, leverage AI technology that can help amplify your empathy. That's an interesting point and something I've heard going both ways. I've heard some people in the industry saying that AI can't replace empathy from advisors, but I disagree. I think AI can help level the playing field when it comes to empathy with advisors, especially around generative AI that can create text and outreach that feels empathetic. Many advisors don't have the same level of empathy. You know, the best advisors, the most successful ones, in my opinion, have a bit more empathy and understand how to deal with people. Maybe they're better salespeople, they're better at connecting with clients, but other advisors maybe don't have that. And the AI thing could help raise them up by either prompting them, giving them recommendations of what they should be saying to different types of customers. It's only going to get better as the tools gather more data. Industry leader Brian McLaughlin from Orion was at the conference speaking on a panel talking about AI. Custom localized AI models are required to deliver personalized recommendations to clients. General models like ChatGPT won't be as useful to financial advisors. A quote I heard on a podcast, I think it was This Week in Startups by Jason Calacanis, where he said that in the next 3 years or so, all the Fortune 500 companies are going to be will have built out their own localized large language model because they realize you can't give up the crown jewels, your core information, your core documents, your core knowledge, intellectual property, and put it into a public generative AI model. But you need that capability. So they're going to be building their own models. That way, that model becomes basically the smartest person at the firm, knowing everything, seeing every article, every document, every report, and it will know everything at a glance. Brian considers Orion to be a most-in-one platform, which is not an all-in-one, and he believes that because it covers the prospect, plan, invest, achieve pathway and can integrate with any system. We also had Katie Bruner of Skyview Partners giving us RIA M&A mistakes to avoid. Buyers and sellers should avoid working with firms that don't have a detailed transition process. And culture and synergies absolutely matter when it comes to M&A, but at the end of the day, being a strong fit from an operational perspective is equally, if not more important. Another marketing panel with Robert Sophia, founder of Snappy Kraken. Think about marketing as a flywheel versus a funnel. Robert has expressed this thought a number of ways. I wrote an article with some of his comments, I think 4 years ago now. And the article, we called the article Tweet to Table, talking about how marketing is more like farming, not like Vegas. You're not rolling the dice trying to get a big win. You are planting the seeds and you're growing and you're tending your garden, your marketing garden over many months or years. Another comment from Robert Sophia, open rates for emails with video are 4 times higher than just plain text. That's great advice for not just financial advisors, but anyone who's doing marketing and outreach in the B2B or B2C world. Tuesday comments from Future Proof. Okay, almost done here. Got a couple more things I wanted to share with you. There was a CTO workshop on AI transformation that was really interesting, talking about generative AI and how it can be used, low-hanging fruit. RIA should run 2 different work streams. 1, identify external tools that can provide the most value. 2, catalog data that's unique to your business and put it into a data lake. That came from Julian Gartner of Capital Group. Now, the first one, identifying external tools that can provide most value. We recommend that all of our RIA clients every year do even just a one-day quick review of your tech stack and a quick review of the market, just to see what's out there, look at some of the vendors, just get an idea of what's happening. Doesn't mean you have to change. You don't have to buy new software. Just take a look and see what's going on at least once a year. It's hard to have structurally high inflation when you have tech and AI doing who knows what to productivity, said Michael Batnick of Ritholtz Wealth. I'm not sure about that, but we do know that tech and AI are doing a lot of improvements to productivity. I've heard, I listen to a lot of AI podcasts, do a lot of reading on AI, and do a lot of speaking on AI. And some of the stats I've heard anecdotally across multiple industries is white-collar workers are seeing a 20 to 30% increase in productivity by using generative AI, just in general. And finally, I think we can wrap. I have 2 more. One is the great Michael Keatses. He was at Future Proof, gave a great presentation on advisor marketing. He was talking mainly, if I can summarize his talk, was that RIAs, when they are small, their marketing is mostly time-based, meaning the advisors are spending their time to create the marketing and do the marketing, gather referrals. But if they want to grow and scale to very large size, they have to shift from time-based marketing, which is anti-scale because it does not scale, it's linear. The more marketing you want to do, the more time you need. They need to shift to dollar-based marketing, where they're putting in funding dollars into marketing tools, platforms, advertising, marketing campaigns. That's how the largest firms grow. They don't grow by word-of-mouth referrals anymore because that doesn't scale. And finally, my own panel, thank you very much, which was on alternative investments, specifically venture capital investing for advisors. And I encourage you to look at these 2 applications the panelists were representing. One is called Allocate, and it allows advisors to onboard top-tier venture capital into a managed account. And Fundrise, which originally started out, they are one of the largest real estate investment platforms, offering white label private funds through their app. And they've recently added venture capital to their core offering. So Allocate, Fundrise, you can check them out. And if you're looking for more about VC investing. That's my wrap from Futureproof. I was excited to be there. Thanks to Matt Middleton and Josh Brown and the whole team over at Futureproof. Really made me feel at home and helped me out getting ready for my panel. And it was a really great time, great networking. Can't wait for Futureproof 2024. Second story is a combination. I'm combining a bunch of stories here, all about two of the biggest tech providers in our space, tech and TAMP providers in the space. Envestnet and Orion have a lot of news, which makes sense. They're some of the biggest vendors, providers in the space. Why shouldn't they have the most news? It's just a lot. I was doing the research here. It just never seems to end. I go down a little bit of a rabbit hole. So I got a lot for you here. I'll try to summarize it. First, bad news: Envestnet and Orion conducting layoffs. They're both laying off just coincidentally around the same time, but for mostly the same reasons. Both firms have been on a kick the last 4 years or so, buying up companies, expanding through acquisitions, and you have to pay the dues now. It's come due. So the rapid growth is slowing, and now you need to consolidate and the acquisitions, which requires usually layoffs. So that has happened. According to press release, Envestnet's normalizing expenses and operational environment to meet our goals. Sure, for margin expansion and cash flow. I get it. Makes perfect sense. The current market environment has macroeconomic headwinds, according to the Envestnet PR person, requiring a disciplined approach to managing our expenses and optimizing operational efficiency company-wide. Market liked it. Envestnet shares gained 2% Friday to close at 44, although the stock is down 30% year to date. Now, this may be partly a response to activist shareholder Impactive Capital, which acquired a 7.5% stake in Envestnet and 2 board seats last year. And they were really banging the drum for expenses, cutting expenses and increasing profitability. So they have been focused on increasing margins, reducing their headcount, cutting real estate costs. They closed their iconic Chicago office, well, not iconic, but their long-standing Chicago office, and relocated to Berwyn, Pennsylvania. And they trimmed their marketing budget by a third, 33%, according to the most recent earnings report. So a lot going on there. And Envestnet had been acquiring a bunch of firms over the years, and it was very helpful for them, gathering new clients, gathering new technology. They bought firms like Harvest Wealth, which used to be called Trizic, and they were using that for their more of a digital advice provider. They bought, of course, Folio Dynamics was a tech platform they bought a number of years ago, and those firms need to be consolidated. That's requiring these layoffs. Now, moving on to Orion. They also announced some layoffs, about 80 people. We don't know how many people Envestnet's laying off, but according to a Citywire report, Orion's laying off 80 people, which sounds like a lot till you realize they've got over 1,500 employees, according to PitchBook, which means there's only about a 5 or 6% hit, which is not unusual for firms of that size. And they said they were basically eliminating redundant roles, which, again, it was expected. Now, of course, Orion also had a string of acquisitions. I was a little more detailed writing those down because I'd forgotten a couple of them. They acquired FTJ Fund Choice, a $10 billion TAMP, April 2018. Advisor with a Z, financial planning software, which became, I believe, the new client portal. Hidden Levers, stress testing and proposal gen software in March 2021. They acquired Brinker Capital, announced in June 2020. That was a very interesting acquisition. It was really huge for Orion. FTJ was their first TAMP acquisition, but I think Brinker really put them on the map because Brinker has about double, 2.5 times the assets of FTJ, but also they're known for their own strategies. So they didn't have that before. So acquiring Brinker gave them access to custom strategies that a lot of RIAs really like and have been successful over time at attracting assets. And another thing that flew under the radar about the Brinker Capital acquisition was that Genstar Capital, another PE firm, became an investor in the business alongside Orion's existing PE firm, TA Associates. And you don't hear a lot about that since it's not flashy tech news, but having Genstar on board to me is a big deal because Genstar is very well versed in the industry. I mean, they've got a number of other industries they work in, but in wealth management, they're really smart. They have made some strategic investments that have done really well. They invested in Mercer Advisors in 2015, and that firm has grown tremendously. They're over 48 billion now. And they also invested in 2018 in Cerity Partners, which is over 50 billion, I believe 53 billion in RIA in 2018. And also in 2018, they bought a majority stake in broker-dealer Cetera, which recently announced the acquisition of Avantax for 1.2 billion and now has 9,000 advisors and 163 billion in AUM. So I believe Genstar Capital is a great partner to have for Orion in their next phase of growth. And finally, two final acquisitions for Orion: Basis Code in October 2021, which was a compliance tool, or still a compliance tool. And I think that really helps Orion's platform. That their compliance wasn't bad, but I think Basis Code really helps beef up the compliance aspect of their platform, which is important because a lot of broker-dealers you work with believe in compliance, and compliance is very important. And we find when we're helping broker-dealers with RFPs for enterprise platforms, compliance plays a major role in their decision. I know a number of firms that, with Envestnet as an example, cited Envestnet's compliance tools as a major part of their decision. So I'm not surprised that Orion bulked up in the compliance category. And finally, one of their biggest acquisitions, April 2022, Redtail Technologies, Redtail CRM, the most popular CRM in the RIA space. So layoffs were not surprising. All right, so that's the bad news. Let's talk about good news for Envestnet and Orion. Envestnet announced some enhancements to their enterprise platform. One of them, which I thought, again, flies under the radar, but really jumped out at me: generic orders for fixed income securities, which we also call characteristic-based models. For many years in managed accounts, and I've been doing managed accounts for over 18 years, you can't do fixed income in a model. If you want fixed income, individual fixed income securities in a managed account model, a sleeve of UMA or an SMA, you need to go to a manager traded sleeve. The manager has to do all the trading of the SMA directly. You can't model it out because there's too many individual bonds. You know, there's every security, every company can have dozens of issuances of fixed income security. So it's not like buying IBM stock. IBM bonds is very different. But if you could tell the rebalancer, I want you to create a model with fixed income with this maturity, this risk, this AA, AAA, this return, and then now go find the bonds that match that. That would be very powerful. A number of firms have been trying this over the years and haven't really done it well enough. So I'm very excited to see Envestnet's version of this characteristic-based fixed income modeling. The other announcement from Envestnet was that their Insights engine, which is part of their wealth data platform, now offers 100 different types of data-driven insights, including the new Money in Motion AI-reliant insight that establishes patterns in account activity and cash flows, such as regular deposits or withdrawals. And it immediately alerts the advisors if things are changing. If they're used to getting regular deposits and the deposits stop, or vice versa, if they're used to getting regular withdrawals and they stop, or something big comes in. And this is sort of the holy grail, or one of the holy grails of AI for advisors, is being able to analyze tremendous amounts of data across your entire book of business and alert you as to the next best action. What should you be doing next? Which clients you should be talking to next? Which clients might be interested in particular products next? And Envestnet is really investing heavily in their data platform. Additional insights include identifying opportunities for tax loss harvesting, clients who are in underperforming products, which the compliance team, I imagine, likes, and flagging if clients haven't had their financial plan updated. So we're seeing more and more of these things sort of work in to different platforms. And you're going to see AI become ubiquitous. It's just going to appear into different platforms, and pretty soon every advisor will be using it, and they won't even know it because it'll be behind the scenes. And it's more good news for these two firms. Orion announced at Futureproof their new portfolio comparison tool. Now, this tool has a number of features, and I find it pretty interesting. It's got scenario visualization, so advisors can do what-if scenarios for the different portfolios, including risk factors, tax implications, allocation changes. It's got enhanced precision, centralized workflows, and integration with the rest of Orion. And these kind of things are super helpful. Some of the firms, some RIAs we worked with in the past, when they don't have these kind of tools, have to resort to blunt force. Things like, well, we can't tell what the unrealized gain is on a portfolio because our system doesn't allow it. I'm just going to put in a liquidation into my rebalancer so I can see what the realized gain is without submitting the orders, which is really not the right way to do that. You want a what-if tool like this tool from Orion, that where you can say, what if I do this? What if I were to liquidate? What if I were to sell, or implement this model that replaced this position with that position? What are the tax implications? How would it change? So this is not going to be available, I believe, until next year. But we're interested to see the Orion portfolio comparison tool when it comes out. More good news for Orion. Okay, this again, I promise this is the end of the Orion Investment news. Orion's new CEO. We got Natalie Wolfson, new CEO coming from AssetMark. Natalie was on the podcast. If you want to check out the WealthTech Today podcast, just do a search for Natalie Wolfson, and you will find her podcast. You can listen to that. I find her to be a fascinating person. It's got great leadership skills as she led AssetMark through a tricky phase of their growth, and now will be leading Orion to the next phase of their growth. And look forward to seeing what Natalie can do with Orion as they move on. Continuing with the next story, I'm going to combine a couple stories here about updates to other tech vendors, acquisitions, new feature functionality, new investments. We've got, let's see what we got here. FMG acquires MyRepChat, expanding compliant text messaging capabilities. MyRepChat enables users to conduct text and group messaging, provides a digital assistant to automate triggered communications, and includes compliance features, scheduling options, auto forwarding, yes and yes, yada, yada, yada. MyRepChat deal is FMG's 8th acquisition in 7 years in the wealth management space. Since 2016, FMG has acquired Advisor Launchpad, Advisor's Assistant, Agency Revolution, Platinum Strategies, Marketing Pro, 20/10, and Vesterly. They've really become a major player in advisor marketing. We've done at Ezra Group, in our Ezra Group research division, we keep track of all the different categories in advisor tech, and digital marketing is no different. So seeing how FMG has grown over the years from a very basic marketing platform to a full featured marketing platform has been impressive. Their capabilities in CRM, website, social media, content personalization, automation, I think is impressive. Adding MyRepChat, a very well-known firm in the industry with a very good client base and strong technology, I think will really help FMG in their overall suite. And you want to have more things to sell to your existing client base and increase your wallet share with them. So it's good to have that. And FMG is also working on a generative AI-powered tool that uses their unique knowledge to create automatic responses by chat or email for FMG's customers. So that's something that you're going to see more and more, where these chat GPT powered chatbots that appear to be more intelligent and can answer more questions. So good for FMG. More tech news. We have YCharts, which I'm sure you know these guys. YCharts.com has announced integration with Virgil, VRGL, which is an application that started out with OCR of client statements. I wish I thought of that idea. Brilliant. So they allow advisors to take PDF files of their prospective clients' held away accounts or other accounts and then suck them in and pull out the data, and then you can stick that into a proposal. Naturally, Virgil has expanded into proposal generation, as have Y charts, and they're partnering. So now they can move data between themselves. So Y charts, for their new proposal generation capabilities, can pull in data directly from Virgil. I'm not sure if it's vice versa. I know it's from Virgil to Y charts. I'll have to check into that. We have a number of RA clients who use both of these vendors, so I'm happy to see them partnering, because you definitely want to. We're always looking for ways to make our advisory clients' lives more seamless. So companies like Virgil and Y charts that can work together, even though in some areas, other areas, they may be competing. It always helps when you've got common clients to be able to integrate together, and that also help their WealthTech integration score, which we'll be talking about a little later. Next is Holistaplan announces strategic partnership with Lead Edge Capital to transition from a startup to a scale-up. Holistaplan, such a great story. Roger Pine and Kevin Lozier founded Holistaplan in 2019. They've been on the podcast. You can check them out. They recently surpassed 20,000 users this past summer. Big kudos to them. They basically created this category of tax, this tax management category of OCR of PDFs for 1040s, and then providing automated advice on those. They really own the market. I believe 5 years ago, before they started, tax management software had a very, very small market share of advisors. And now, just 4 years later, it's I think 60% of advisors are using some form of tax management software. And Holistaplan owns an astonishing 42% overall market share. That's according to the latest 2023 Keats's Advisor Tech Survey, which you can find at keatses.com. And their closest competitors, BNA, Income Tax, and FP Alpha, each have just 3%. That's 10x, more than 10x, unheard of. So for the Holistaplan to double down, get some funding to see how they can continue their stranglehold on this category, because success breeds competitors, and there's going to be more firms building out these type of 1040 analysis tools like FP Alpha did. They came out with this recently. And Holistaplan also received the highest satisfaction score of any provider on the Keats's survey, which was an average of a 9.3, which is extremely high for advisor satisfaction. More news is this is personnel news, people moving around. Former Brinker CEO Noreen Beeman joins Commonwealth Board. Congrats, Noreen. Congrats, Commonwealth, for bringing an industry leader, an experienced operator, and CEO Noreen Beeman onto your board. She joins luminaries such as Mark Tibergien, former CEO of Pershing Advisor Solutions. Now, Noreen left Orion last year after completing the integration of her firm, Brinker Capital, into Orion. And Noreen's also started her own executive coaching and consulting business. So please reach out to her if you need any of those services from Noreen. Another announcement of board members, Wealth.com adds Brian Hamburger as a strategic advisor. In June, Wealth.com debuted their artificial intelligence-powered legal assistant, Esther, which allows advisors to upload an existing estate planning document and receive immediate summary of the plan. They added Brian Hamburger, industry leader and founder and CEO of Market Counsel, the compliance firm, as well as Market Counsel Conference. So kudos to them. They made a great move, managing to convince Brian to join their board, because he's a very knowledgeable person, very well connected, and I know he will help them out tremendously. So that's a quick roundup here. Now on to the Advisor Tech Map and the WealthTech Integration Score news. As you know, I work with Michael Keatsis on the Keatsis Ezra Group Advisor Tech Map, which you can find at keatsis.com. And every month we meet and go over new vendors that want to be added to the map, vendors that are being taken off the map due to acquisitions or firms going out of business. Michael and I are constantly revamping the map, looking at categories, evaluating how do we make it more useful, more organized. And so there's always something going on, always something we're tweaking or changing. So let's give you a quick rundown on what you'll see in the October map, which should come out, I believe, this week sometime. 1, 2, 3, 4, 5. They got 5 additions to the map. First is Buckler, which is cybersecurity platform, which is, I believe, owned by FCI Cyber. So Buckler is a cyber program management system. So that's if you have your own CISO and you're managing your own information security policies, business continuity plans, things like that, vendor risk management. If you're doing it in-house, you use a tool like Buckler to manage your program. Now, if you wanted to outsource all of that, you'd call FCI Cyber. They're a managed security provider around cybersecurity. So you can call them. And we did tweak those categories a little bit. So FCI Cyber was in the cybersecurity subsection of managed service providers, but now we moved FCI into the managed service provider section and put Buckler into the cybersecurity section. So you'll see that in the map. My Compliance Office is a compliance tool. As the name implies, they've got communication compliance, compliance oversight, market abuse regulations, pay-to-play, compliance, conflict of interest, crypto compliance, a wide range of tools to monitor what your employees are doing, so that you can check them out at mycomplianceoffice.com. Oh, by the way, Buckler is buckler.com, buckler.com. Cash Tech. That's a tough name to spell. CACHETECH.io. Cash Tech looks like an all-in-one platform for advisors, comprehensive software solution, portfolio management, workflow, billing, CRM, client portal, mobile app, tax loss harvesting, performance reporting. Wow. They've got everything here at Cash Tech. So you can check them out at cashtech.io. They are now in the all-in-one category. NovaTrack. Nova-Track, TRAK.com. Nova-Track.com goes into advice engagement. They are advice engagement solution, helping advisors work with their clients better, helping clients make meaningful actions, presenting data and analytics in an engaging way. It looked a little bit like it was financial planning-ish to me, but apparently that's only one part of their tools, and they really think that they're more of advice engagement. So you can check them out at nova-track.com. Let's close these windows here. 1, 2, 3, 4, 5. Rainbook, advisor lead gen. This looks like a direct-to-consumer website that's trying to get consumers, investors to log on and then select an advisor, helping them determine which advisor might be best for them. So that's definitely securely in the lead gen space. And that is Rainbook, RAINBOOK.com. And that's all the additions. We have some restructuring. Michael and I have been talking about restructuring the portfolio management all-in-one categories and the trading rebalancing categories, moving them around a bit, renaming it to something else. So we're not doing it this month, but just it's coming down the pike at some point, probably before the end of the year. Some things that were removed. Advisor Peak was acquired by Adipar, so that came off as an icon in the rebalancing category. Tiffin Plan has been renamed to Tiffin Wealth. I can't speak. Tiffin Plan renamed to Tiffin Wealth, and we removed Tiffin Risk. Tiffin Magnify replaced Tiffin Plan. Boy, Tiffin's got a lot of news. And Tiffin Clout has been closed. Apparently, they shut that one down, Tiffin Clout. Reg Ed was bought by Compliance Max, so that icon got removed. And then Covisum has a number of applications: Tax Clarity, Income Insight, Social Security app, and Smart Risk app. So they're all on the map. You can check those out. And those are most of I think it's all the updates. You can check out, again, I mentioned at Keatses.com. You can check out the WealthTech integration score. If you want to see the score of any of these vendors, you can go to EzraGroup.com and then click on what we do and then select WealthTech integration scores. And you can see, you can go by category. So you can look at the all-in-ones if you want to see all the all-in-one applications and see how they're scoring. You could see that Orion, InvestNet, Black Diamond all have superior scores. Morningstar Office, Advise on Tamarack have excellent scores. And then below that, not so good scores. But it's all available to you on the Ezra Group website. And our scores are also available on the Iskowitz.com AdvisorTech directory. If you look up any particular applications, we send him those scores. He can see the Iskowitz satisfaction score for each application, as well as the WealthTech integration score. And something I'm announcing here is for all vendors that have a WealthTech integration score of 6 or above, you are eligible to join the WealthTech integration score recognition program. So please contact us either at consulting@ezragroup.com, or you can email me at craig@ezragroup.com, and we happy to talk to you about the benefits of the recognition program. One of them is the ability to use our badges on your websites and all your marketing materials, but there's a lot of other benefits to the WealthTech integration score recognition program. So please reach out to us to learn more about that. All right, that's a wrap for another episode of the WealthTech Today podcast. Thanks for listening. Please go to our website, ezragroup.com, scroll to the bottom of the homepage, and sign up for our newsletter. Every month, you'll receive an email chock full of wealth management goodness, news, information, updates. You will not be disappointed. Thanks for listening, and talk to you all again next time.